Welcome to the Education Investment Podcast. In a world where investors are looking for stable and growing long-term returns with social impact, the education sector is becoming increasingly attractive. We speak to leading educators, operators, and investors in the education sector around the world to explore this growing investment theme alongside our listeners. From preschools to K-12 schools to higher education and vocational education. From edtech to education infrastructure. From VC investors to private equity and family offices, we explore it all. I'm your host, Monde Nkosi. Education has always been a big part of my life because my mother founded a school which was across the road from our home. I have benefited from excellent schools and teachers in South Africa and the US. I went on to study education and am now very grateful to be an investor in this sector that I love.
All opinions expressed by podcast guests are solely their own opinions. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.
Today, I am privileged to host Jasmeet Singh Chhabra for a conversation on the education infrastructure asset class. We'll discuss what this asset class is, what value it delivers to school groups, and how Jasmeet has managed to attract institutional capital to this asset class in India. Jasmeet is the co-founder of JV Ventures, an investment firm in India managing a portfolio valued at over $1 billion. He is one of the pioneers of the education infrastructure asset class in India, having co-founded Cerestra and Cappella, two investment vehicles that own school real estate serving more than 20,000 students in India. I was introduced to Jasmeet by a mutual friend in the education sector, and he's been instrumental in shaping my thinking around the education infrastructure sector. He's also been very generous with his time and advice. Jasmeet, it's lovely to have you on. Welcome to the pod.
Thank you so much, Mond, and thanks for having me.
First off, we'd love to learn a bit about you before we get to some of the subject matter on education infrastructure. So I'd love to hear a bit about your journey. Where were you raised and what ultimately was your path into the education sector?
I've been in India all my life. I've worked in India all my life. My father worked with a government company, so I was born in the eastern part of India and raised pretty much across the country from down south to the east to the west. So to that extent, through my growing years, I've had a good experience of, all the myriad cultures and the diversity that India is known to have. I've kind of experienced it firsthand from north to the south to the east and the west. I traditionally hail from the northern part of the country, a state called Punjab. And I've spent bulk of my working life in Mumbai and Delhi. Although the nature of work is such that you end up traveling across the country. I completed my master's in management from Delhi, a college called Management Development Institute back in 2000. Spent 5 years in corporate finance. And 2005 is when real estate as a sector opened up in India for private equity and venture capital investments. Prior to that, it was in the negative list. And as luck would have it, I got a lucky break to join a startup team, which was in the process of setting up a real estate private equity fund. It was called India REIT back in the day. As a founding member, I worked on both the fundraising side and deployment, worked largely in the traditional residential and commercial spaces till about 2014. And then I decided to get on to my entrepreneurial journey. 2015 was a watershed year in India when the REIT guidelines finally got legislated after a 7-year-long wait. And I thought that was the right space to be in, given the decade that I spent in real estate private equity. And that's when Cerestra started as a venture between myself and my partner, Vishal Goel. And we zeroed down on life sciences, healthcare, and education as two of our key focus areas. So 2015 end, we launched a fund to do K-12 school infrastructure. And it's been a decade since then.
Cool. And we will double click on that further as the conversation goes along. And maybe if I bring it back a little bit to childhood as well, you lived all around India, and it's a huge country, extremely diverse country as well. You mentioned your father worked in the government. Maybe tell us a little bit about family, and if your mother worked as well, perhaps what she did, and your own schooling path.
Sure. No, my mother was a homemaker throughout, and that gave us, a good grounding and a lot of good food. That kind of explains the build part of it. Uh, uh, Living across, so, the beauty of India is every 200 kilometers, the culture changes, the landscape changes, the food changes, and everything changes. So the growing up years were quite fascinating. There was just one bit where every 4 5 years you pretty much switched off and prepared for the new adventure. And then you went to a new city, made new friends and stuff, and that became the order of the day. Uh, I can look back and say that each was better than the other. So that's also got you to this habit of always wanting to explore something different and continue to work on it rather than stay on the more staid course. Family for me was, mom, dad, and an elder sister and a younger brother. So we had a full house. And schooling was largely back in the day. India was still a reasonably closed country. We hadn't really opened up our economies and our borders to a lot of globalization of foreign capital. And school was still a not-for-profit business, largely driven by either the government by means of schools run by state governments. It's a state subject. India has a federal structure.
Yes.
Or by central government organizations which had employees who had transferable jobs. So they would set up these institutions like the army, the armed forces, companies like ONGC, where my dad worked, which is the oil and gas public sector under price, etc. And then a large part of education was largely driven by Christian missionaries, what we call the convent schools. So my schooling had largely been in those convent schools. So in each of the city, I had largely studied in the convent schools because they kind of set the benchmark. Then obviously things have changed over time. Last 2 3 decades, the market's largely been privatized. 1994 onwards, we've taken huge leaps and bounds in terms of opening up our borders across all sectors. So education is no stranger to that. But yeah, growing up was largely in convent schools across the country.
There's 2 points there. One is you've walked directly into a question around where the best food is in India, because you said every 200 kilometers, the food, the culture, everything changes. So you're going to have to answer the question, unfortunately. So which part of India do you enjoy the food the most?
Well, breakfast in North India, because I love my parathas.
Yes.
Lunch would be South India, because the food's really yummy. So if you want heavy food, you go there. And for your snacks, you go to East and West. So I couldn't make a favorite. I had no other way of answering.
That's a cop out. That's a cop out, Jasmeet, but very well done. Handled like a politician there, Jasmeet. That's wonderful. And the history of the sector that you are going into is also really interesting as it overlaps with your life. So I think let's move on then to some of the main content that we wanted to discuss, which is the education infrastructure asset class. And I think it's fair to say, standing now in 2025, that still education infrastructure is not something that's widely known outside of the investment sector and the education sector. So let's just start right at the beginning. What is education infrastructure?
To take a parlance from IT industry, because India is such a software-focused industry, the hardware is IT education infrastructure, which is your land, building, largely, be it schools or higher education, and what you teach inside is software. So the real investment that goes into the school is essentially the infrastructure part. It qualifies as social infrastructure, right? Because it's not something that you would develop just as a real estate otherwise. So we use a infra term for it, social infra term for it. But very simply put, it's the land and building.
Got it. That's clear. So on a school site, this would be the underlying land. It's the classrooms. It's the swimming pool, if there is at that particular school. It's sports fields or whatever infrastructure is on there.
It's the underlying land. And if I look at how you would dissect the land, it would have the school building, the admin building, if it's boarding, the residential part, and then it would have the common amenities, which would include playgrounds, sports infrastructure, and what have you. And within the buildings, obviously, your class, your labs and stuff. On a lighter vein, what we say is everything that falls when you turn the building upside down, that's not infrastructure, everything else is.
Okay, now that's interesting. And if I just try break education infrastructure down, then there's the preschool sector where in many markets there's also an education infrastructure sector. There's the K-12 or the schools, and then there's also higher education and often renting buildings, etc. Just give me some context on where you and the firms that you're affiliated with, which part of these subsectors do you operate in?
So for completeness sake, I'll just add two more. One is vocational, which is your
Yep.
tuition centers and coaching centers.
Yes.
And the last one is your short-term course delivery institutions, the true
Yes.
vocational centers and not degree or diploma colleges. So these are the five that I would think cover the entire gamut of education. Um, if you look at each of the sectors, the primary sector or the kindergarten play school sector, we don't normally consider as part of the larger infra unless it's embedded in a larger K-12 school, because it's reasonably not unregulated. There is no oversight per se on that space, and therefore they tend to operate out of different class used buildings. So they can operate out of certain residential complexes, clubhouses, or office buildings, like a creche and a daycare extended into a kindergarten. So that's kind of out of purview. Uh, our focus is largely on K-12, which is kindergarten to class 12 integrated schooling. Uh, Higher education is something that we don't really focus much on, apart from the ancillary infrastructure of higher education, which is largely student housing, faculty housing. Uh, we believe there's a lot of opportunity there, but it's still got a little bit of regulatory overhang in a sense that the asset needs to be inside the not-for-profit trust for higher education in India still. Vocational and tuition centers is again something which is not highly regulated, so we don't see them as critical infrastructure for education. We just see them as real estate out of which those sectors can operate. So between higher education and K-12, which is for us core education infrastructure, we are largely focused on K-12 and some bit on the fringe infra for higher ed.
Okay, and two key themes that came out as you were talking. One that's very clear is regulation. You want to operate in a space that's well regulated and where the independent sector is well entrenched. And the second seems to be specialization. So these are assets which are made specifically for the purpose of education, not other purposes. Okay, now that's very clear. And maybe just give me the lay of the land in India. I see education infrastructure. It's almost a derivative of education itself. So if there's demand for education, then there'll be demand for education infrastructure. So maybe just give me a bit of the context. Is India's education sector growing? Is the need for education infrastructure growing? How big is this?
So last year, sometime there was a lot of press about how India's kind of overtaken China on one important metrics, which is population. And while a lot of news media had different viewpoints on it, from my business standpoint, that meant more students, right? So coming back to the boat point, India's got the largest school-going population in the world, uh, and with a reasonable growth rate as well. So you hope to continue seeing that as you go forward. Increasingly, government spending on education in terms of delivery of education is obviously keeping pace with the times. But their desire to invest in the infrastructure, which takes bulk of the investment, is not the same. Which is to say that they would want to see more private sector participation, like you've seen in many other sectors coming into it. So, why I'm giving you all these nuggets is that India is the largest K-12 education market by volume, not by value, because our fee points are lower. So, commensurately, the real estate also would follow suit because it's a derivative demand and not a multiplier demand on top of the school fees itself. But in terms of volume, it's the largest market in the world. And the good news is, in the last 10 years, from an urbanization standpoint, India has seen our city footprint grow from 30 to almost 150 cities with more than a million population, which were earlier connected by fairly remote means of connectivity. So it would take, perhaps half a day to reach from one city to the other, given the traffic congestion on road or the train timings and no airports. Today, you have airports in about 150 cities, which are all connected to the main cities. Road networks grown leaps and bounds, and so has the rail network. Uh, Thanks to COVID, the employment opportunities have grown in all these cities. So, uh, there's this whole existing demand which was being catered to in the larger cities. Education wasn't reaching the rural areas. Rural have now become largely semi-urban. City proliferation has grown, so the demand is, I would say, kind of infinite. Now it's only about fitting in the brass tacks of economics to make it work. I mean, just think about it. There are about 350 odd million school-going kids in the country.
That's absolutely mind blowing. Both the scale of it, 350 million school-going children in a single country. It's absolutely mind-blowing. And then the other point you made around 150 cities with more than 1 million population. I'm doing this conversation from South Africa at the moment, and our entire population in the country is around 60 million people. So it is the scale that you're talking about is just absolutely mind-blowing. And I'm interested in, so there's the simple sheer force over many decades of population growth and an emerging middle class. I'm interested also in whether there are any cultural factors in India, in either how much people prioritize, how much they spend on education, or any cultural factors like that that are supporting the growth of the sector.
So if I were to just start off with base statistics, the average household spend on education is still lower than the average across emerging markets in India. It would hover at around 5.5%, 6% as against 8 to 9%. Uh, you know, Part of it is because of the more affordable cost of education in India. Part of it is also because, uh, you know, uh, a lot of education goes towards the bottom of the pyramid, which is free. But it's still about 6.5%, which means there's a lot of scope of growth. Culturally, or rather, from the middle class and the economic standpoint, while India is a very culturally diverse country, one common factor across the country is English as a language. And the other common factor is that when you complete your education, you are normally a job seeker. And when you're seeking a job, the services sector is a prime sector in India. So English medium education in India through private schools becomes a essential part, no matter which part of the country you are in or which culture do you belong to. Education has always been a high priority spend in the country. Now, what changes is, like you rightly said, given the diversity and given the fact that education is largely a state subject in India, also the delivery mechanism, certain choice of subjects, certain choice of course curricula, the mechanism of delivery might change, but the common themes stay same. And the other good factor or a homogeneous factor that ties in together is we have state boards in each state, but they are restricted to the government schools. From a national board standpoint, we only have two boards, and one of them is a predominant board called CBSE, Central Board for Secondary Education. The other is ICSE, which is modeled around Cambridge. Now they are common across the country, so movement and fungibility is also quite simple and easily achieved across schools, and that has led to a proliferation of a lot of chains in the country. So chains which would have 40, 50, 80 schools across the length and breadth of the country, which kind of ties in together in spite of the diversity.
Okay, that's absolutely fascinating. And then double clicking then on education infrastructure. You defined it as it's the land, it's the buildings, it's the fields, etc. That a school is on, and then the operator would lease that from you and then run the school. So maybe just talk about it from the perspective of the school operator. What is the value, or why lease a school rather than just building your own and owning it?
Let's look at the economics of a school business, and that will kind of help us answer that question. Uh, First of all, a school takes about 3-4 years to stabilize. You need to reach about 60-70% occupancy to cover your fixed costs and structural vacancy, because you start filling the school from the bottom and it stabilizes once you've kind of filled all your classes. So the way we think of it is, it starts off as a pyramid and it is stable when it becomes a cylinder in terms of occupancy
Got
across
it.
classes,
And,
right?
and Jasmeet, just to clarify that simply, so if tomorrow I'm starting a school from scratch, I'm not going to go ahead and put 13 grades or 12 grades up on day one. I'm going to start off with first grade, second grade, third grade, and they fill up. And it takes several years eventually for me to have all the grades and to be, as you said, at let's say 60% full.
Yeah, and the another way to kind of look at it also is that you would start with, say, the bottom 4, 5. Initial years, you will
Yes.
not get full capacity in the classes. So even when you get the full capacity, the possibility is your higher grades will have lesser students and your lower grades will be more students. Your higher grades would have less sections, your lower grades will have more sections. So, you need to even out in terms of the grades itself, and then you need to even out in terms of density of grades also. So now, why this was an important criteria is because it does take 3, 4 years for the school to stabilize, number one. Uh, and during this time, the school needs cash not only to service the infrastructure, but also to service the operations because you're not necessarily break even. You carry certain amount of fixed costs till you reach about 40, 50% break even. So that's one thought. Now, once the school is stable, and if I looked at the P&L of a school, say a school makes a revenue of 100, just to kind of put it in proportion, thumb rule is about
Yes.
40 goes towards running expenses of the school. About 30 to 35 goes to service the real estate cost. It can be opportunity cost of your equity, debt cost, leasing cost that you're paying, etc. And about 25 to 30% is your margin that you make on the school. Now that's like a thumb rule if you did an median or a mean of about, say, the cross section of the industry, right? Uh, now, now comes to the point of the infrastructure. Infrastructure takes almost 80% of your investment that you need to stabilize a school, between 70 to 80, and that you have to spend upfront. 20 to 30 of your investment goes towards stabilizing the school in terms of operations. So now there's two very interesting, gaps. If I look at the long-term view of the school, right, 70, 80% money that I put towards infrastructures contributes only 30 to 35% of the top line as my return. 20% of my investment that I put towards services contributes 25 to 30% of my uh, overall revenue contribution. Net net, the opportunity cost of putting every penny into infrastructure as against putting it into operations has a factor of between 1.7 to 2x, which means if I were to not buy my infrastructure and lease it, I could run maybe 2 to 3 schools for the same amount of money that I would run one integrated school. Now, if I ran 3 schools with that money, 30 into 3, I would make 90% of the top line as my return, right? As against
Yes.
60 or 65. So there's a clear arbitrage in terms of equity return itself that I generate by being asset light in the operations. Now, from a short-term standpoint, my school needs 3, 4 years to stabilize, right? Now, in those 3, 4 years, if my capital was finite, would I be better off paying, 8 to 9 rupees? I'm just using rupees as a random
Go
currency
ahead. Yep.
towards rental, or would I rather put 70 into making the building?
I hear that. So it helps the operators grow faster, and put a lot less capital down to do what is their core skill set usually, which is running a school. Often, these would be people who have either been teachers or principals or the
Absolutely.
like, rather than
Educators.
fundamentally real estate or infrastructure people.
Right.
That makes a lot of sense.
Yeah. And if you did have the capital to put down for building the school also, you're better off running 3 schools because again, in schooling, unlike say the other asset classes, like say hospitality for that matter, etc. If you lose a student this year who was wanting to come to your school but you didn't have capacity, he goes to another school, right? And then he goes there for good.
It's not
Whereas,
a hotel room where you'll come stay with me next month.
Exactly. Absolutely. So if
Yeah.
I had the same amount of money, would I rather have 3 schools if I had the ability to get students, or would I run one school with the building?
That makes absolute sense. I'm fascinated by the numbers that you went through. The scale of India is just so different to anything else that the numbers also end up just being so different. If I take the numbers that you were quoting and I compare them to my home country of South Africa, for instance, here the cost of the real estate would tend to be, for a mature school now, in the region of, call it 10 to 15%, closer to the 15% mark. So the model is just fundamentally different. The teacher costs are different. The number of students is different, and it's really fascinating to learn about. So if I'm then again putting myself in the shoes of an operator, I'm an educationalist, I'm starting a school here. I've got you as my partner now. You own this underlying land where my school is. I can't pick up my school and put it somewhere else. This really is a partnership, and schools stay in the same place for a very long time. So, talk me a little bit about. You've been in all aspects of real estate. You were at India REIT before, now education and life sciences, etc. What's unique in the partnership that's required specifically in education?
So I will try and address this from the context of both the operator
Yes.
and the investor or the asset owner.
Yes.
From the operator standpoint, we discussed at length as to the benefits of not owning and leasing. Now, clearly, you can't move your school one day to the other. So the only additional requirement you have is that you want your school for a long time. So you would not settle down for a lease of 3 years or 5 years like you would otherwise do in a hotel or in an office, etc. You would gun for at least 15 years, 25 years or 30-year leases. Standard in India is 30-year leases with 10 or 15-year lock-ins. The other thing you would not want to take chance with is the upkeep of the school and the maintenance, etc. So you would prefer triple net leases where you take care of all the compliances on property tax, insurance, as well as scams or housekeeping and upkeep of the school, because a well-maintained school is more important for you as an operator than it is for the landlord. So you don't want to look at him to kind of maintain. So you typically tend to bargain for triple net leases. That's from the Sorry.
Jasmeet, the other side of that, which I love that you've gone there, is no one likes their property manager. So it creates a natural tension in the partnership. So I fully agree with you. It's in most instances better for the school to continue to manage their own infrastructure on site and the maintenance, etc. aligned. Yeah.
And coming from a fund background, I'm very happy not doing it any which ways. So I think that's from the operator standpoint. Now, from the asset standpoint, what really attracted us to the sector was one, I get to sign 30-year leases with the escalations. Now, sometimes escalations are not marked to inflation, but markets have a standard around inflation. And if you have a 30-year visibility on your property being leased, then it's a very stable cash flow that you're getting. Triple net leases actually work for the landlord as well, because then you're not hassled about maintenance and asset management of the buildings. Three, school buildings are reasonably simple buildings, right? They don't have expansive lift lobbies and what have you. So they don't need refreshment every 6-7 years like you would do in an office building. So your real rent is actually equal to your nominal rent. There's no 1-year rent leakage to refresh the building just to keep the tenant happy. So the underwriting becomes extremely simple because you're not worrying about releasing. Your leases are 100% on day one. So there is no 5% structural vacancy risks here. School might still be running at a lower occupancy, but they'll take the entire building and land from you. So in a lot of ways, the downside you typically face in asset investments, schools tend to cover them on day one. Most important risk around schools is the credit risk, because you don't have large corporates, you don't have IBMs and Apples running school, right? So you're taking a credit risk on an educationist. And again, because you can't just shift a school out, you can't even just shut down a school overnight just like that. There has to be a process around it because the kids studying there. So the only thing that kind of worried us about the sector when we started was around the credit risk on the counterparty. How do we underwrite the counterparty? But the silver lining in school, and it's a very strong silver lining, is that the revenue model of a school is extremely predictable. So if I have 1,000 students in my school, beginning of the academic year, and they pay an X amount of fee, all kids will pay the same amount of fee, and they'll all be paying the fee for the entire year, and largely for 7 to 9 years with the whatever escalation, because it's a sticky asset class. So the way we address the credit risk around schools on rent collection, given you'd given it for such a long tenure, was by transferring our credit risk to the student rather than depend on the operator to pay us. So we were the first guys to introduce the concept of escrows on the fee point to pay us our lease. That way, my credit risk now becomes absolutely granular and retail, where if my contribution is, say, 30% of the top line towards rent payment, right? I need 70% of the kids to default on their fees before it starts to hurt me.
Understood.
Which isn't going to happen. So I
of
think
course.
with that, we found the asset class to be extremely defensive, and it might not lend itself to huge upsides when cycles change because you've given it for a long lease. But given the risk mitigated return that you talk about, it becomes extremely attractive. Now,
Okay.
sorry, on a lighter vein, our typical pitch used to be: listen, after all said and done, a kid will always go to school because you have two kids, right? I also have two. You love to send them to school after 2, 3 days. So schools will always have the kids. A hotel might not, an office might not. And then COVID hit. So there were no kids in school. But, but good news is the moment the impact of COVID reduced, all kids were back in school. So even there we got reasonably mitigated. So yeah, that's largely the a view on it from both perspectives.
That's wonderful, Jasmeet. That's a great overview. And there's a few things there that I'm keen to jump in on. You spoke about some of the benefits, you spoke about some of the risks, and I think it was a great overview. If I just talk about some of the, double click on some of the benefits that you mentioned. So an office lease would be, 5 years or something along those lines. And you said here the norm in India is 30-year leases. And generally the norm in the industry outside of India as well tends to be in the 15 to 30-year range. So that's a quite extraordinarily long period that you have visibility and stability for. And if I just think of traditional real estate, I mean, the biggest thing that kills you is vacancies. When a tenant leaves, you've got to do tenant fitting and you lose 6 months of rental. You might have to offer some incentive, and it makes a huge difference to the ultimate returns when you look over a 10, 15-year period. Here, you've got one tenant, 0% vacancy over a 15 to 30-year period, as you say, and with a triple net lease. So that seems quite unique and strong.
It is. I guess just to be fair on all sides, there's a flip side to that also, which is when the markets get re-rated, you don't get the re-rated rent because these are
Yes.
contracted rent. But then that's a small price to pay for the structural vacancy and the 1 year fit out that you would, difference between nominal and real rent. And, so that's a choice you essentially made. That's why I said on a risk mitigated basis, the returns make a lot of sense. On an absolute
Yes.
number, they might not just stack up to, where you would see some of the other asset classes in a good market. But in a bad
Yes.
market, you would still be, coming out with flying colors. So if you want peace of mind, the right asset class.
Yes, it's an attractive risk adjusted return,
Yes.
and everything, as you say, does come with trade offs. This point you've just mentioned for me is part of why I think the term education infrastructure has emerged to describe this, rather than you hear a bit less frequently education real estate. If I think of it as almost, if you think of a freeway with a single or a bridge with a municipality, and there's a 30-year cycle, you're not going to renegotiate the fees every 5 years. There's going to be a 30-year contract, and there's going to be some agreed escalation with inflation over the period. So this ends up in profile or cash flow profile coming back to the investor being a lot more similar to conventional infrastructure than it is to real estate.
Yeah, so it's a long-tailed annuity for sure, with one specific advantage that bridge after 30 years will have been fully depreciated, or you would need to amortize it. Here, you're still sitting with land underneath. So it's basically gives you that versatility of a real estate upside and the infrastructure long-tailed returns.
All right, that's extremely helpful, and maybe just to make it real for people as well. If you do have an anecdote, for instance, of a school group or an individual that you've worked with who are starting schools and where you've helped them grow by not having to spend all that money on the real estate or the infrastructure, they've managed to expand access to education.
So actually, we've had a pretty interesting journey. So I could share a few case studies, rather, of what in what way you helped the sector or the educationists. Now, and here the parallel would be from an option standpoint for them to go and take debt, right, to kind of build that, or get private investor slash private equity into their operating business with rights that come alongside. And so, in fact, the first transaction that we did was with this gentleman who's been in education field for over 2 decades, who'd actually built the school, and in the process, and with a lot of passion, and in the process had raked up quite a few debts, obviously. And then school does take a little while to stabilize. So our intervention essentially not only helped him pay those debts, because he monetized the asset, keep full control of the school without having anybody else sitting on his cap table, and gave him enough liquidity to not only enhance the product offering within the school, but offer, go ahead and build play schools around, which became feeders to the main school. So, in a quick succession, because of all these fringe benefits, he grew into a multi-school chain from a single school operator, post the transaction. And I'm quite happy to state that in the city of Hyderabad, that's now one of the top 3 schools in terms of ratings in a short span
Wow.
of 12 years, because the guy could fully focus on building it. In fact, now it's part of a large global aggregator. So all the likes of Nord Anglia, ISPs, and Cognitas are in India. So it's part of one of the school aggregators. So yeah, those have been some of the case studies. I won't say anecdotes because that for that I'll have to spin a story. But yeah, case studies for sure.
No, that's wonderful. And I was talking to a founder. He's a former teacher, and then ultimately founded a school. He's now a founder of a school group with around, call it, 15 or so schools. And what you've just mentioned now, I think, is one of the underrated points in the sector. If it costs, let's just pick a number and say $20 million to set up a new school, and $15 million of that is going towards infrastructure, so land and buildings. If you, as a single entrepreneur who's formerly been a teacher, unless you have that kind of money, if you're going to accept equity even from another investor for that, you're going to end up owning almost nothing in
Absolutely.
the company which you started. So he was talking about this in the context of the journey that they went, and from the first school, second school, and expanding. So I do think it's an underappreciated element of it, where this provides capital without you needing to basically give away your company to someone else, and also it's less risky than debt, where at any point a debt provider can take it away. So that's really helpful context. And then let's take, so you've the argument you've made to me about why education infrastructure is an attractive asset class, stable long-term cash flows, 15 to 30-year leases, very little vacancies, I think is a compelling story. But when you started this, education infrastructure was a lot more novel. Now there's some big institutional funds, there's private equity, there's some listed funds. How was it initially when you were fundraising for education infrastructure and telling the story?
Oh, it was like, wondering why you're doing what you're doing.
Were you bashing your head against a wall?
Oh, yes, all the time. So, because in India specifically, you also come with this overhang of the not-for-profit social sector background of education. Most people would, within the first 15 minutes, switch off, because they'd be like, listen, you can't invest in schools. I'm like, no, I've done my homework. I can invest in the school infrastructure. I'm not investing in the school, investing in school infrastructure. He's like, no, you can't. So you faced a lot of those rejections.
Yes.
Then you also had a lot of people who had reservations around what if the operator does not pay you your fee. You can't close a school, you can't evict an operator, which is a very real reason. And I think that is this whole escrow mechanism that we or a routing bank account mechanism that we managed to create, and we stuck to it. So we were very clear that even if it's a large operator, if he's not going to give me this right to directly attach the cash flows coming from the child, I'm not going to do that counterparty transaction. Helped us in great stead. It translated to slower growth, because some of the bigger guys who could give you chunky portfolios upfront would not want to give it to you. But we said that's a compromise worth taking, because you can have a situation where a school is running perfectly fine and your lease is not coming to you, and the process of eviction is a good 2 to 3 year long process. So I think that challenge with the escrow we managed to surmount well, and especially COVID and post-COVID, a lot of other guys took notice of it and started building it into their system. But yeah, first 3 4 years, if I were to really kind of juice it up and break down to the 2 or 3 key concerns, these were it. And clearly, a new asset class has its own sense of naysayers which come along. And
Yep.
lastly, the question is, how much can you scale it? Is there enough demand? Now, anecdotally, yes, 350 million students, yes, so much of real estate is all great. But unless you don't put the first few deals on the table, you also know that, the subsequent monies are hard to come by. So
Yes.
it took us a good 6, 7 years before we could, get it to a scale and size where now multiple institutions are looking at it, which is kind of nice because that helps your entire industry grow.
That's brilliant. That's brilliant, Jasmeet. And I think it's helped the sector as a whole. You've subsequently managed to raise in total hundreds of millions of dollars of institutional capital into education infrastructure in India. So just thinking about the investor profile and how that's changed. So you've raised from international investors as well, and you've had a successful, I don't know if exit is the right word, but a fund coming to an end and a new fund starting. So if you fast forward now, how are the conversations now and the appeal that these investors are seeing?
We started with so when we did our first fund, the idea was not to do a big fund because we realized that we would face headwinds. So we wanted to do more like a proof of concept fund, which is a small capital to kind of display in practice what we were talking in a concept. So we raised a small pool of capital from high net worth individuals to private banks within the country. And we ran with it for a good 2, 3 years. Once we had a reasonable portfolio and a track record, that's when we got our first institutional partner, which was an investor from UK. And we continued to build that portfolio. Our target always was to eventually list it as a REIT equivalent. So REIT equivalents in India are infrastructure investment trusts. We just have that categorization difference, but they're like REITs, which is regular payout to investors. Uh, we scaled it up through COVID, and then we were planning on the listing when another larger investor came by. Said, "Why don't you consolidate? Let's go it further before you list it because it's still not the size equivalent of what is the office listed place, etc." So that's the time when we decided to join hands with them and provided an exit to our earlier two sets of investors. Where we stand today is our idea is to continue growing the portfolio now. We are looking at it from a lens beyond India and across emerging markets in Asia, largely Middle East and Southeast Asia. And then we would see ultimate objective would be to figure out a listing for the portfolio as a REIT in some jurisdiction, depending on where the portfolio gets kind of rebalanced. But right now, I think we are still looking at it as a growth portfolio by adding more geographies to it and obviously continuing going deeper in India.
Okay, that's brilliant. And you've spoken about the risk profile a lot. Everything is a spectrum of risk and reward. This being my second to last question on education infrastructure. So you've spoken a lot about this being a very low risk sector with long-term visibility on cash flows. So let's talk a little bit about the return side of it then. How do you think about the return expectation from education infrastructure in India?
Okay, so I would break the returns in two components. One is in terms of just a simple long-tailed annuity or a yield which is derived from the lease rentals. And since these are stable for a good 30-year period, for long tenured investors, that itself provides a very lucrative option. If I look at the rental yields that you can generate in India even today, you're still looking at closer to 9 and 10%, which is easily about 300 plus bips above 10-year treasury. The other element of return comes from juicing up the yields itself by adding a component of leverage. And cost of leverage today for these assets in the kind of tenures would be in the range of 8.5%. So you can actually reach early double-digit number returns just on pure rental yields. If you add the 3 to 4% escalation that you derive, you're actually in early teens, or mid-teens with leverage. And then comes the component of compression, which is if you look at the other asset classes which are trading in the market today, they are in the range of 7 to 8% circa. So if you get in at 9.5 and exit at 7 to 8%, that adds another 200 to 300 bps return, assuming you have a 4-year average hold. So late teens is a target return that we normally kind of aspire for. We've been able to deliver better in our earlier funds, in one of the two funds. because it was held for a shorter period, and we could scale it up faster. So the compression kind of played out much sooner than the 4-year period. But a late teen number is what should be a good ask.
Okay, and that's a high teen number with relatively low risk. I mean, the correct me if I'm wrong here, but I expect 10-year Treasury in India to be somewhere 6 to 7%, somewhere in that sort of range.
Yeah, 6 to 6.5%.
Yeah, so I think those are excellent unit economics. I mean, at 9 to 10% entry yield with the leverage, and ultimately a high teen return, including some of the capital appreciation at a low risk is very attractive. The other element, I guess, of it, as I've been thinking about the sector, and you've helped shape me in this, it's just the simple impact of compounding. Because these can be done over such a long period, if you take $1 million, just taking a random number, $1 million compounded at 15% over 20 years grows to $16.4 million. So over a 20-year period, a return which doesn't sound astronomical, right? 15%, that's less than the numbers which you were talking about, has a 16x return over 20 years. And given that one of the big elements of this sector is how long and the longevity and the stability over time, it ends up being really attractive for investors.
So I'll just add one more thing. If you actually hang on to the asset for 16 years, it's not just the 15% that you're making. You also retain the land, which has its own value. So it's not just the return, but that plus the land. So just thought I'll highlight that.
Yes, yeah, that's brilliant, Jasmeet. Let me move then back to you as we ask the final concluding question. So I asked the same concluding question to all of our guests, and it's actually my favorite question in the whole interview, which is, please tell me about your favorite teacher or educator.
Yes, I have one, and a very distinct one. This was in a city called Rajahmundry. It's a very small city down south. I did my class 10th from that school, 7th to 10th. I spent 4 years there. School called St. Anne's English Medium School. And we had an English teacher, a gentleman, God bless his soul, he's no more, Mr. Varaprasad Rao. He introduced me to English as a language and its wonders, starting from Shakespeare to poetry from P.B. Shelley. And, there's one of this favorite poems of mine called Death the Leveler, which he would explain at great lengths, and it would actually get me into a different world. He's the man who got me writing. He kind of pushed me to start maintaining a journal or a diary. And, back in 2004, I wrote my first book. I've published 2 books. And I sent it to him for reading. And he retired by then, he painstakingly made comments on each page. And that's my favorite manuscript that I hold dearest to heart. So yeah, he's my, most memorable, guide, philosopher, and friend.
That's absolutely wonderful, Jasmeet. I have noticed that about you. You're one of the few people, particularly in the corporate sector, who shares poetry. And I've seen some of the poetry that you put up. Sometimes you put it up on your LinkedIn and all over, and it's wonderful to hear, and some of the backstory into where that came from. So, Jasmeet, from me, it's really to say thank you. This has been an absolute masterclass on education infrastructure. You're one of the pioneers in it and have done a lot for the sector. As an investor in the sector myself, very grateful to you for the work that you've done, and it benefits the entire ecosystem. So looking forward to seeing your continued growth and watching it from a distance.
Thank you so much, and thanks for having me. And I'll look forward to seeing you in India soon.